Hello, everyone. Jason, mapsignals.com. First of all, if you like what you see, like and subscribe. Really helps us out. Bring that content. And please leave your comments below. Let us know how we're doing. And head on over to mapsignals.com. Sign up for our latest insights. It's a free blog. You get lots of cool content. You don't have to pay for anything. And we can bring you stuff like this. The 5 best stocks to buy for February of 2022. Let's get right into it. What was that? January was insane, people. We've all felt the pain. Stocks free falling, bouncing left and right, slip sliding. It's been a wild and woolly one, and possibly the most volatile January on record. Man, it's brutal. But I got to tell you, that is an opportune time to go shopping for phenomenal stocks, because deals in the stock market don't look like deals at the store, right? They're not getting you all excited. They're wrapped in fear and pain and anxiety and worry that the market's never going to go back up again. That is when you find your deals. So a lot of the stocks we're about to look into, and you got to stay till the end to get the last one, have been punished severely. So let me just tell you quickly how I found these 5 best stocks. I went into the mapsignals.com database and I filtered for a bunch of different things. I wanted relatively safe companies, so I looked for companies that had really low debt to equity ratios, right? Because if interest rates go up, which is what everybody's worried about, it affects companies that borrow a lot of money. I wanted to find profitable companies that are making big profit margins, growing sales and earnings on a 1 and 3 year basis on a double-digit level, and they have lots of cash on their balance sheet in general. So I'm looking for companies with less leverage and a strong growth track record, and companies that make money and are poised to do well even in a rising interest rate environment. And believe it or not, out of 6,500 stocks, this very narrow screen found 21. And I'm bringing you 5 of the best ones to buy today. So let's get started. So what time is it? It's time to head to the Map Signals portal. Right away you see our Big Money Index. That's for members who log in. You can see it's been Chop City, a very volatile tape. Big drop in January, which means time to go shopping for stocks. What kind of stocks? Well, let's just get right into it. Our number 1 stock to buy for February is AMD, Advanced Micro Devices. I'm sure you've heard of them. Saw a lot of big money buying throughout last year, right up into the peak in November. Right on my birthday, things started to fall, and that stock has come in tremendously. It is down 20% year to date. It's just got phenomenal fundamentals. They got free cash flow of $777 million minus CapEx. Got a lot of cash, very little debt. They have a debt to equity ratio of 9.8%. So again, they're not really reliant on debt to refinance. Gross profit margin, 25.5%. They got a huge 1 and 3 year sales and earnings growth, double-digit percentage. It is massive. So I really like this company. Good luck finding anything that doesn't need chips or graphics cards in the near future. So Advanced Micro Devices, AMD, is our number 1 stock. Our number 2 best stock to buy for February is EPAM Systems. They design and develop software, most notably in the automation space. Is really cool stuff. Hasn't been a lot of big money buying recently, but it has been a prior top 20 name. We like to see that. We have seen a significant pullback, but look at that chart, rocketing to highs and then all of a sudden pulling back significantly. Again, this is a stock that has terrific fundamentals. It's a $27 billion company. It's down almost 29% in a month. It's been on our top 20 report many times, boasts serious 1 and 3 year sales and earnings growth. Massive. $540 million of free cash flow minus CapEx. So they got a lot of cash on the books. Only 13.4% debt to equity ratio. So I love that. It's a really great play to get something at a discount. with this big sell-off that we've seen in January. Moving on up to the number 3 stock to buy for February. This one is MASI. Masimo Corporation. This is a healthcare company. It's a prior big money favorite. Recently hasn't seen much, but look in the past. You see that green? Leads to great things. Red seems to be like an opportunity. It has been on our top 20 report quite a few times. Check that out. And since the first time, by the way, I haven't been doing that. It's up 530%. Even with this monster pullback. Again, let's look at that. Boom. Great time to potentially go shopping for this one. It is a $12 billion company. It is smaller. It's down 25% in a month. It's appeared on our top 20 report 35 times since July 1st of 2014. It's got terrific sales growth and earnings growth, double digits on 1 and 3 year basis. It's got $131 million of free cash flow minus CapEx. CapEx means expenditures like equipment, office buildings and machinery and things like that. Debt to equity ratio of only 2.4%. So I think it's being unfairly punished. Makes a 21% profit margin. Terrific fundamentals. Next up on our list is Repligen Corporation, another healthcare name. Really came in hard from like $325 all the way down to a trough of $177, significant pullback. This thing has been a big money favorite in the past. It kind of has been absent for a while, but look what happened since the first signal in around $68. I mean, a massive rise. Again, has it been a top 20 name? You betcha, for a long time. It's up 992% since the first time it appeared on our Map Signals Top 20 report. Let's take a look again at this fall from grace. I want to tell you about its fundamentals. Phenomenal company. $11 billion company, still respectably sized on the smaller side. Stock has come in 25% in a month. It's a great opportunity because this thing has phenomenal, again, 1 and 3 year sales and earnings growth. Terrific. It has $38 million of free cash flow. Not a ton, but plenty to get them through at 18% debt to equity ratio. This one's going to be a little bit riskier because it has higher debt to equity ratio, smaller cash, but still in very good proportions. It makes a 16.4% profit margin. I like that setup. It has been beaten down. I think long term, we're going to see good things from this company, in my opinion. For those of you who are still with me, you're in for a good one because our number 5 best stock to buy for February is a beauty. I do own it, full disclosure. I am getting hurt on it, which is why I think it's a gift for other people who want to look for opportunity. It's called Teradyne, T-E-R. They are a chip maker. They do some phenomenal things. Look at how this thing just fell off a cliff from 168 all the way down to a trough of 112. They announced earnings recently. They beat on earnings. They beat on revenue. They beat analyst estimates, but they lowered their guidance. People didn't like that. Pounded the stock. It was down 25%. But when the dust settled, if you read into the earnings report, they announced a $750 million stock buyback. Now, let me ask you a question. If you owned a company or, you ran a publicly traded company and you knew you were going to buy your own stock back, wouldn't you want to buy it back at much cheaper prices to hopefully watch it rise in the future? I think that's a potential setup that we have here for Teradyne. Let's look at some of the fundamentals. It is a $19 billion company. The stock is down 28.2% in just a month. It's got phenomenal 1 and 3 year sales and earnings growth, double digits across the board, a huge profit margin of 27.6%. It's got almost $1 billion of free cash flow minus CapEx. Again, all those capital expenditures, you take that out and you talk about the cash that's left over, almost $1 billion, and they only have a debt to equity ratio of 7.2%. That to me seems like it is a scoop. That is my own opinion. Again, I own the stock, but there you have it. So there it is, everybody, the 5 best stocks to buy for February of 2022, right after the market washout. This is a great time to identify opportunities for the future. I tried to find ones with low debt, lots of cash, great sales and earnings growth, and profitable companies, so that this whole interest rate fear thing might be unfairly punishing these stocks. That's my thought anyway. If you like what you see, please like and subscribe. Leave your comments below. Don't forget to head on over to Map Signals, go to our latest insights, and sign up for our free blog to stay informed of all this cool stuff. I will catch you next time, and until then, don't follow the news, follow the big money. Talk to you soon. Bye.